So very good evening, everyone, and welcome to our session on this topic of Insolvency and Bankruptcy Code 2016. So very important subject, not only with respect to the exam part, but both in terms of professional opportunity and in general understanding of the corporate world. So I think as a student, we should try to concentrate, learn, develop the concepts, and understand the applicability of this particular code, the reasons, and obviously the various intricacies in this act. So a very exciting act and the most recent one in the world of corporate laws. So I hope students have logged in, and I'm sure we would be having a very exciting and very interactive session. It is one of my favorite subjects, and I've been involved in this world of insolvency for the last 4 years, and a lot of complications, a lot of challenges, still an evolving law. So why this law came into existence? The first basic understanding that why was it required? Were there any laws previous to this particular law which talked about insolvency, bankruptcy? So friends, let us, good evening. Good evening, Mr. Shyam Kumar. So let us understand the overall macro environment from the business perspective. When I say business, from the corporate world. If you see from the businessman, the founder, the promoter side, things were not easy since the business environment took off in India, where there were a lot of challenges for starting a business. Good evening, Bhomik. Because there was a license Raj. But then when the Indian economy opened up in 1991 and thereafter, the entry for doing business eased down. And when there was no barriers of starting a business, that was a turning point for in the Indian corporate world. So it happened over a period of time where everybody who wanted to do business was welcomed, and that business was given a lot of benefits, support from the government. Thereafter, the businesses thought that fine, that entry became very easy, but I think everybody should be given an equal opportunity for doing a business. The environment, the conditions, rules applicable should be same for everyone, and nobody should allow to dominate, create a monopolistic situation. And therefore, the birth of Competition Act, which provided that nobody can create a dominant situation in this country. And if one does so, it will be subject to Competition Act. So the businesses were given a level playing field where everybody had an equal opportunity to do business. So one was the entry part, which became very easy. Then everybody was given an equal opportunity. That was a level playing field. So everybody thought, yes, so if it depends upon me, how do I run my business? So nobody can dominate just because of being the big size businesses, and they could get the extra benefit. So the first 2 points were taken care. But later on, again, the thought process came in, friends, that fine, my entry became easy. The operations became very easy. Everybody had an equal chance of growing up, scaling up. But what if I want to close down my business? What will happen that I'm not able to run my business and I want to shut down my business? Then the thought process again went on and evaluated by the government that yes, the exit of any business from this country was very difficult. And the average time period taken to close down a business was about 7 to 8 years by complying with various other laws which were in existence. And then the government came up with the thought of ease of doing business index. So they found that this one was the area which was lacking in the overall circle of doing a business. Circle means entry till exit. When you complete the whole circle, it's not only about entry and then you don't find an exit way out. When you complete the whole circle, then the concept of ease of doing business is considered as complete in all sense. So to provide an easy exit and a time-bound manner to everyone who wanted to start business, IBC was given a thought. And then the seeds were born of how to provide an exit of business. So this was the need. And then the idea on the government came up with this particular law, that is the Insolvency Bankruptcy Code. So they created a committee. Obviously, before framing any law, a committee is framed where the preamble is sent in. The reason why this code is required or law is required, that was discussed. And then the committee gave their recommendation. And it mentioned that why not bring in one comprehensive law which will cover every aspect of closing down a business, and the businesses should not be forced to run from one place to another to close down a business. If we are welcoming someone to start a business, we should always give them a respectful exit also. So one law which covered every aspect, and that too is not about closing down only company, closing down my individual, or covering the insolvency aspect of individual, corporate, partnership, and so on. So one law which covered every aspect. So there was no multiplicity of law. And then the biggest challenge was how to bring a particular time frame which was earlier not defined. And therefore, it took years and years to close down a business. So why not bring in a particular time frame which will provide a low time resolution for the business, which is again one of the biggest features of this code. And then a single window clearance rather than tapping the windows of different departments of the government or the court. Why not bring a one window clearance with one chain of authority, instead of again bringing in different authorities into picture, one chain of authority, and protecting the interest of the workmen and employees, which have been again always in the limelight when the businesses are closed down. So taking all these features of the code, IBC was born. And the word insolvency and bankruptcy was more taken in a positive consideration. Normally, if I ask you, friends, if I ask you a simple question, insolvency, whether it is a negative word or a positive word, bankruptcy, is it a positive word or a negative word? In general, obviously, everybody would consider it as a negative word. No second thoughts about it, because nobody would think of going into insolvency or bankruptcy. But if you look from the other aspect, friends, there are situations which may come up with anyone. It may come up with anyone, friends, where things are not under his control, and because of certain external environment, they are not able to run the business, and therefore they may go into insolvency. Like, for example, scenarios like COVID, scenarios like GST, scenarios like war can test any of the businesses across the world. It's not only about India. And when they fail the test, those external threats, they don't have any choice but to close down a business. So friends, if we consider this act as a negative act, then we cannot create an opportunity out of it. So our job as promising chartered accountants of this country would be to consider every act as a facilitator in the whole process of the businesses, and maybe at times a solution provider. So this IBC is more of a solution provider, where you need to understand the term insolvency and bankruptcy. So remember, insolvency or bankruptcy is a state. It's a particular situation when an individual or a company are not able to pay the debt, and the value of the assets are less than the value of the liability. Very naturally, it can happen, as I said, with anyone. When the value of liabilities are more than the value of the asset, and the individual or company are not able to pay the debt, that is a state of what? Insolvency or bankruptcy. Now, why these two words? Are they interchangeable or are they same? Remember, friends, if this insolvency is a state which is not an desired state, so obviously everybody wants to be very healthy, but we all know that at times our health is not as good as we desire. But then that if there is a problem in the health of a particular individual, there are remedies to cure that health. So in same way, this IBC Act provides for certain solution or remedy for this particular state, which is not a good state. Now, to understand the difference between insolvency and bankruptcy, let me tell you, friends, the word insolvency more relates to the corporate world, while for bankruptcy, it is more related to individual. But in common parlance, when we talk, we can interchange it. But then, remember, technically, bankruptcy is for individuals. Insolvency is for corporate. So, if this insolvency can be treated, if for corporate, if it is treated, it can be treated through a resolution plan and recovery. And for non-corporates like individual, if it is treated, it can be treated through a repayment plan and recovery. So the crux is that insolvency is a state which can be treated, and that means a solution is available. So this whole act will cover two aspects. Obviously, one aspect would be how to draw the company into insolvency and how to bring a resolution of that particular state. So insolvency, if it is not treatable, if it is not treated, that means there is no such solution which is coming up. Then for corporate, it will lead to liquidation, and for non-corporate, it will lead to bankruptcy. So that means if treatment is available, treatment can be available through resolution plan or repayment plan and then equity. And if it is not available, then we take that particular company into final stage of liquidation or bankruptcy. I hope it is clear till now that what does insolvency means. We have still not gone into the act. It is only creating that framework in mind that IBC is a act which will provide a solution to a particular state. It is not a negative act. So remember, in other words, insolvency is a state and bankruptcy or liquidation is a conclusion. Very important. Insolvency is a state and bankruptcy is a conclusion, or liquidation is a conclusion. Not necessarily that all insolvencies will lead to bankruptcy. There could be a resolution and recovery. But if it is not there, then the final outcome would be liquidation. So what is the objective of this code? What is the objective of this code? So when this code was enacted, the purpose was clear. The purpose was to strike a balance between the interest of the stakeholders of the business and the business keeps on continuing, and the creditor does not lose much amount because of default. So the objective was that to consolidate and amend all the laws relating to the reorganization and insolvency resolution of corporate person. So to bring in all various other laws which actually talked about insolvency under one comprehensive law, and also amend all the laws, be it income tax, be it GST, be it service tax, be it customs, or any other law, to bring in alignment with the IBC code. This is a very important thing. Then to fix a time period, as I said, there was a time frame which was decided. The obvious purpose was to maximize the value of the assets so that every stakeholder gets the right amount. To promote entrepreneurship. Now that's an a very contrarian statement when I'm talking about insolvency. So if I talk to someone about insolvency and talk about entrepreneurship on the same time, both are on opposite direction, right? Though they do not go hand in hand. But then we need to look at the other side, friends. As a businessman, if I know my entry is easy and an exit is also easy, that will obviously promote entrepreneurship, because I know that if I want to open, I can open easily, but if I want to close, I can close easily. So now I need not worry about all these complications. So that is why it should bring in more comfort and promote entrepreneurship rather than deter the entrepreneurs to come into this world. To increase the availability of credit. So when the company goes under insolvency, probably nobody would be willing to fund that particular company. Why would somebody come and fund that company which is going towards insolvency? But because of this law, because of the various provisions of the law, a company which is under insolvency, but if it wants to raise a fund, then obviously that fund will be secured, 100% secured. The company there will be no loss to the lender who is providing money to that company which is under a state of insolvency, so that the business continues. Then, as we have discussed, to balance, interest of all the stakeholders, including the alteration in the order of priority of payment of government dues, which is very important, friend. Previous to the enactment of this particular code, the first priority in all circumstances was the government dues, which here under this particular code has taken a backseat, and they are not given the first preference, but they are in somewhere in the middle of the whole distribution chain. So when I say government dues, it includes dues towards, let's say, income tax department, to GST department, and other various other departments. And the code promoted the concept of framing and one board, that is Insolvency Bankruptcy Code of India, so that the authority is one only for all the laws. So any questions till now? Please raise your point. No? Okay, so let us go through the framework. Very important. The framework of this particular code. Now, if you see the framework of this particular code, the framework is divided into two parts. One is purely from the administration point of view, the execution point of view, and the second is from the point of view of the judiciary. Because without the role of judiciary, we cannot decide on our own. So there has to be a judiciary who can decide on certain matters where it requires certain kind of validation, judgment. Therefore, the role of judiciary is very important in this whole process. So one is the execution, that is through the creation of the IBBI board. And then within the IBBI board, we have various agencies who are going to support this whole process of execution, and the judiciary, which comprises of tribunal and the Supreme Court, to support this whole process, to facilitate the decision-making process through various judgments and orders, so that there is certain kind of control and check in the overall process. Great. So the structure was created in a very smooth manner so that the process is seamless and people don't have to run here and there for getting approvals or permissions or compliances part. For execution part, as I said, so board was created, IBBI, Insolvency Bankruptcy Board of India, same as SEBI, same as IRDA, same as RBI. Each particular board has got different function. So here another board was created with a purely simple objective of facilitating the process of the code. And within this particular board, we have three agencies, IPA, IP, three basically support pillars of this particular code. IPA, Insolvency Professional Agency, then Insolvency Professional, who is always on the limelight, and the Information Utility, the third angle, Information Utility. And then we have Tribunal and the Supreme Court. Tribunal means NCLT, National Company Law Tribunal, and the Supreme Court. The missing element, High Court. So that's again one of the plus point, that for any of the whole process of the judiciary, we don't need to involve High Court. Directly from the tribunal, we can move on to the Supreme Court. So there was no question of High Court coming into picture. So one, we have the IPA, IP, and the Information Utility. So let us understand something about the IBBI, Insolvency Bankruptcy Board of India, which provides for establishment of a regulator to oversee these entities. The entities are like IPA, IP, and IU, to perform legislative, executive, and quasi-judicial functions with respect to all three. So legislative, that means they will create the law, they will come out with regulations, rules, and then they will ensure that it is executed. And if required, they can act as a role of quasi-judicial functions. That means more primarily taking any disciplinary action against the IPs, IPA, and IU if required. So established in 2016, 1st October, and then came into, actually the code came into existence in December 2016, but the act, the IBB was created on October 1, 2016. Obviously, it is in the form of a body corporate having a perpetual succession, as it happens with any other board. Say, as we have discussed in SEBI also, the same kind of structure is created out here. The IPA, the role of IPA, and why does IPA came into existence? So it provides, this code provides for establishment of the IPA to enroll and regulate, whom IP. So same, we have ICAI, which actually enroll all its members and regulate its members, and frames the rules with regard to the performance of the chartered accountants. So same way, we have the IPA, which actually enrolls all the insolvency professionals. So that means if you become an insolvency professional, you need to enroll with IPA. So there are different IPAs today under existence. So primarily three: ICAI RPA, then ICSI IPA, and the ICMAI IPA. So we have three IPAs which are in existence today. That means anybody who wants to enroll himself as an IP, they can either enroll with any of the agencies. Not necessarily that if you're a chartered accountant, you have to enroll with only ICAI IPA. You can enroll with ICSI IPA also. So the key function is to enroll and regulate all the IPs along read with the regulations. So IPA can also perform regulatory functions. Basically regulatory not in terms of law, but in terms of the standards and the code of conduct, which are binding on all the members. Then executive functions like monitoring and inspecting and investigating members on a regular basis. So they can call for any other information, document, submission of returns by the IPs. Then they can gather information on their performance and take note of any malfeasance in the conduct of the IP duties. And based on any report, they can address the grievances of the aggrieved parties, hearing complaints against members and taking suitable action. So the IPA can take strict actions against the IPs. So REQ, QER, QR code. Remember the functions of IPA 3, REQ. Then comes into picture the role of insolvency professionals. As a chartered accountant, we can always play the role of insolvency professional. Obviously, there are certain criteria of becoming an insolvency professional, and the criteria are laid down. But just to give a brief note that any chartered accountant who is a practicing chartered accountant having 10 years plus experience, they can become an insolvency professional provided they undergo a training and pass an exam. So 10 years plus practicing, training plus exam, 4 conditions before you become an insolvency professional. So what is the role of insolvency professional? They are intermediaries. So now remember, whenever the word intermediary comes on the lighter note, I think they're always subject to pressure from both the sides. One is purely on the execution part, and the second is from the regulatory part. So they are, sandwiched between these two places, and then the job or the life becomes very difficult, because as an intermediary, we are pushed from all forces. But then they would play a very key role. So again, being an intermediary, playing a key role, that makes the job more tough in executing the whole bankruptcy code. So it includes a lot of wide range of functions. It is not only specific to a particular process, but it includes from right from taking over the company, which is going in insolvency, and then bringing out a resolution, and if no resolution, then taking the company into liquidation and finally closing down the company. So a tough job, and the job is more of, as let's say, you are the owner of the company or the CEO of the company, and then you have to run the business till you find a particular prospective buyer for the company, or the company goes into liquidation. Now, the job of insolvency professional is that they become an RP of a company, or they become a liquidator. So be a liquidator or the RP, that is resolution professional, or a bankruptcy trustee. three names are given to the same person: insolvency professional, RP resolution professional, liquidator, or a bankruptcy trustee. Both point out to the same person, that is insolvency professional. Mr. Bhaumik, yes, we can discuss this matter if it does not have enough money. When we will cover the conditions when the company can go under insolvency, we'll discuss this particular issue. Yes, a very valid question, Mr. Jose. When we talk about the difference between a code and a normal act. So normal act, if I say in purely simple terms, it is a new act. So when something new is framed, it is an act. But when it comprises of different act, and then all those acts are clubbed under one act, that becomes a code. That is the broader, simple understanding of difference between code and act. I hope it is clear, Mr. Jose. So the job of insolvency professional is to take reasonable care and diligence while performing his duties. So again, this is one of the responsibility. To comply with all the requirement and terms and conditions in the bylaws of the insolvency professional agency of which is a member. Again, an obligation. Responsibility. To allow the IPA to inspect his records. Responsibility. To submit a copy of all the records of the proceedings before the EA to the board as well as to the IPA of which is a member. Responsibility. To perform his function in such manner subject to such conditions as may be specified. Restrictive functions. So from this only we can understand that the job of IP is tough. Yeah, so Bonnie, you are correct. When you discard all the old acts and then concentrate only on one particular act, then it is regarded as more of a code. So under this particular IBC, they were the acts of SICA, BIFR, then Individual Insolvency, Presidential Insolvency Act. So there were a host of about 6 to 7 acts which were discarded, and then we finally came up with this particular code. So coming to IU. Information utility. Information utility. Now, what is the job of information utility? Very important, friends. Now, information utility is an agency where they will gather data, collect data, collate it, authenticate it, and disseminate those data to debtors in a centralized electronic database. So for example, and a simple concept, if I have given, a bank has given you a loan, so bank would record this particular transaction that I have given this loan on this particular date of this amount at this particular rate of interest. Along with that, they have executed these many documents. And this information would be uploaded on the IU. Bank being member of IU or a user of IU. So therefore, they will load all these kind of information And I, as a borrower, will confirm, yes, I have taken this loan and I have executed this document. So they have collected and collated and authenticated this data. Now, if this data is required by anyone, either by virtue of this code or otherwise also, they will disseminate this financial information, let's say, to the rating agencies. It may be possible. To courts, that yes, this is a loan which has been accepted by this particular company or a party. So this information would be available to all the creditors, the resolution professional, liquidator, all stakeholders in the IBBI Act. So the purpose is that, to remove any information asymmetry. Information asymmetry means I have given a loan of X amount, you are taking it as Y amount. So there is an asymmetry. But because it is available on IU where you have given a loan and that is being confirmed by you, so there cannot be any difference. And you will not be dependent on a particular person to provide that information because it is readily available with the third party. So the objective, the obligations is that the IU will provide such services as may be specified, including core services to any person if such person complies with the terms and conditions. So the whole purpose is to create and store financial information in an accessible format, except that submission of that financial information meets such minimum service quality standards so that everybody gets access to that information at the same time. Get that information authenticated by all the concerned parties, give access to that information who wants to access particular information, public statistical information as may be required by regulation. Maybe the government, let's say somebody has filed an RTI and the government has to give that information. So maybe they can take that information from this IU to provide that statistical information. Have interoperability with our IUs. If there are other IUs, then they should be interoperable. That means I can give information to that particular IU anytime. So this is the role of information utility. So we have seen three roles: IU, IP, and IPA. 3 I's. I hope it is clear. I hope it is clear. Any doubts? So coming to the role of adjudicating authority, friends, all proceedings under insolvency will be carried at NCLT. Appeal against NCLT orders will be carried to NCLAT and thereafter to Supreme Court. No, there's an agreement which is signed. So the information will only be given to the people who require that information as per the IBC code. Nobody would have an access to that information always. Yes, Bonnie, IU has got a website. Normally, the National Stock Exchange has come up with this particular IU. So NSEEL is the one of the famous IU which is providing these services. So BOMIC both have agreed, the borrower lender have agreed to that contract that I am providing that information and you may share that information as and when required under the IBC code. So there cannot be any confidentiality breach. Right? Just 1 second. Sorry. Yeah. So the court has created one chain of authority for adjudication. That is the NCLT, and there's no role of civil court to interfere in the matters, and no role of High Court also. Now, along with the NCLT, if it is in relation to the individual, then you may approach the DRT, Debt Recovery Tribunal, and DRAT, and thereafter to Supreme Court. So very clear, friends. Very clear. Please note it down. It's an MCQ question. If it is a corporate, NCLT, LLP, NCLT, individual partnership, DRT, but the confusion would be if there are individuals who have given a personal guarantee in relation to a corporate debtor, in relation to the company which has taken a loan, then the case would be falling under NCLT. Normally for individual it is DRT, but for individual who have given a personal guarantee, for example, a director, and the company has taken a loan. So the director has given his own personal guarantee to the banks for giving a loan to the company. Then if there's an insolvency proceedings being carried out against that particular individual, then it would be carried out under NCLT, not under DRT. But for a normal individual, it is DRT. I hope it is clear, friends. I hope no confusion. Any confusion, please ask. Okay. Example, XY, a firm applied to NCLT to be declared insolvent on the ground that it is not able to pay off the debts to its creditors in present and in near future. State whether the act of the firm is valid as to the application of filing in terms of jurisdiction. The answer is not valid. DRT is Debt Recovery Tribunal. So it's like another tribunal, Income Tax Tribunal, NCLT, National Company Law Tribunal. DRT is Debt Recovery Tribunal. You must have read it in SARFAESI, or Recovery of Debt and Securities Act. So under SARFAESI, there is a provision of applying to DRT for recovery of the outstanding amount. So coming to the code, friends, I hope the basic concept is now clear. So coming to the code, the structure of the code, this code is structured into 5 parts, part 1 to part 5. Part 1 to part 5. And which covers around section 1 to 255. There's a whole lot of sections, 255. But yes, from exam perspective, maybe we'll not go into the part 3, 4, and 5 in detail. Part 3 is obviously not required because it relates to individual, which is not being notified yet, except for the personal guarantor part. So to that extent, I'll cover in brief, but otherwise not required for that. Then there are 12 schedules which are attached to this particular code, which gives us different kind of conditions, rules, forms, formats to be applied in the execution of this particular code. So part 1 is preliminary, which will cover different definitions, which is applied to overall code. Part 2 will cover the insolvency resolution process and liquidation for corporate persons, which is applicable in the current scenario. And part 3, which covers about insolvency for individuals and partnership from 78 to 187 section. And then we have the coverage over IPA and IU from 188 to 223, and the miscellaneous provision from 224 to 225. And thereafter, we have rules and regulations, which are in numbers. So quite exhaustive, the rules and regulation. So wherever required, I will cover the rules and regulation also in this whole process. I'll refer to some provisions of the miscellaneous part, which are very relevant. We'll skip this 188 to 223 because it is not relevant. But yes, from 78 to 187, I will cover the basic rules for personal guarantors. That's it, which is applicable in the current context. And then 4 to 77 is in details. Again, in the 4 to 77, I will be covering more on the process part rather than on the penal consequences. So from the exam perspective, I expect at least a 6-mark question minimum. Minimum 6-mark question. I think the coverage is reasonable enough, and sometimes in covering the MCQ, it is more than 6 also. The nature of question is both direct and indirect, so you can have a case-based scenario also in this whole process. Applicable to whole of India, again important, including Jammu Kashmir. And suppose if the question is asked, is it applied to non-resident Indian? Yes. If he is a director in any company and he has given a personal guarantee, obviously it will apply to NRI also. Enforcement date is 28 May 2016. Effective, that means the law came into existence on 1st December 2016. Thereafter, many amendments took place, with the amendment in 12A settlement, 10A COVID exemption, PRP, pre-package insolvency resolution process, definition of home buyers, 24th March notification, which has actually changed the whole landscape of IBC, 29A, 32A. These are all major amendments which have happened over a period of time. We have regulations and rules, regulations with regard to IPA, regulations with regard to IP, regulations again with respect to the process for CRP process, then liquidation regulation, voluntary liquidation regulations. So there are multiple regulations, friends. So from and student point of view, yes, quite exhaustive for a coverage of 6 marks. So if I talk about the various other laws, let's say SEBI, which is quite small, as we took only 1 day SEBI and LODR. So if you consider that particular aspect, 6 marks question only in 1 day we had covered, quite relevant, quite important. Then if you consider the other acts like SARFAESI or SICRA or FEMA, FEMA is again exhaustive. So, but SARFAESI, SICRA Act, and we have considered about investigation, all these topics, or the miscellaneous provision, where again the duration is only 1 day, but then you expect a 6-mark question. For this particular topic and subject, the duration is about 3 days, and the marks coverage would be around the same percentage with some plus 2 marks. So that's it from the student perspective, that is what you need to understand, friends, of the coverage of the paper and the act. But from a professional perspective, which you are going to become in due course of time, this act plays more important role in comparison to, let's say, the miscellaneous provisions, or in comparison to LODR. So from that perspective, I would always give it a higher ranking. But from a student perspective, which is very relevant. Yes, Sarfasi, Sikra, 1956 is fine. But then if Sarfasi and Sikra, see, what I'm trying to highlight is basically just in comparison between the other laws and this law. So as I said, it is 6 marks minimum plus 2 to 3 marks, which may be asked in MCQ and other part. So if you see from the timing perspective, you always have to take a choice. Anyway, as I said, from a professional perspective, it's a very important law. We need to cover it in detail. So provision, this is one of the major section, friends. I have highlighted in red 238, section 238. So 238 is the superpower section, which ranks this particular code above the other various codes, acts. And it says that the provision of this code shall have effect, notwithstanding anything inconsistent therewith contained in any other law for the timing in force, or any instrument having effect by virtue of any such law. That means by virtue of this particular section, this is having an overriding provisions, superriding provisions over any other law, So if any law which is inconsistent, then this law will supersede it. So nobody can question the implementation of this law and say that the other law says something like this. No, it will not be applied, because IBC will always supersede. Applicability, yes, it applies to companies, it applies to LLPs in the current state, and it applies to guarantors to the company, as I've already discussed. It applies to guarantors to the company, but it does not apply to what? Partnership firm, proprietorship firm, individual. Though the law has been framed, there are sections which talks about the whole process, but then because it has not been notified, and today we cannot initiate insolvency proceedings against any individual, proprietorship firm, or partnership firm. It will take time, maybe another 2 years down the line, where the whole infrastructure gets ready, the whole process is streamlined, evolved, settled, and the elections are completed, because this will only happen once the election gets over. So till that time, this is in abeyance. So that is why we will not cover this particular process. So very important, does it applies to banks also? Does it apply to insurance companies also? So as of today, the banks, financial institutions, ARC, insurance companies, mutual fund, collective investment schemes are not falling under this particular purview. So financial service provider means any person engaged in the business of providing financial services in terms of authorization issued or registration granted by a financial sector regulator. So RBI or SEBI or IRD has given registration to these companies. So can I initiate insolvency against these? The answer is no, except NBFCs. Except NBFCs. That means today, if any case has to be filed against an NBFC, can you do that? The answer is yes. The answer is yes. So the recent case of the recent case of what Diwan Housing, Shri Equipment Finance, SREI. These are two companies which fall under the category of NBFC. They have been drawn into insolvency by virtue of the amendment which happened in 2018 and thereafter in 2019. So which brings all these NBFCs, provided the asset size is more than 500 crore. So when I talk about the CRP process, see again, when I talk about the company process from section 4 till section 77, again, it can be divided into two parts. When I talk about companies bankruptcy insolvency, there are two parts. CRP in short, SIP, and other is liquidation. CRP is a process where we try to bring in a resolution of the company. And if it does not succeed, then the company will go under liquidation. That means finally the company will be wound up or dissolved after the liquidation process is over. Under CRP, if it is successful, that means the company does not dissolve. The company is transferred to some new buyer, new owner, and the company remains a going concern. The company remains a going concern. Right. So the CRP process covers from section 4 until 32, along with certain regulations which were range from regulation 1 to 40A plus more. And then a lot of schedule of annexure, which is not relevant from the exam perspective. So wherever you are having confusion, students, please raise your voice, because it's a very important part, understanding the whole structure, the segregation, the terms. If it is clear, then the whole process will be clear. So Bonnie, Bhaumik, and Sumit, I think we have 3 students who have logged in and watching it live, and along with Mr. Molly. So I hope till now the whole perspective, the framework is clear in your mind. So the flow of process, if we see this particular act, especially the section 4 till 32. So when I say section 4 till 32, remember it is CRP. When the word CRP comes in, let's say in the exam, the word CRP comes in, understand that, that CRP is a process where I will try to sell the company as a going concern. Going concern, that means, let's say there is a company X Private Limited. So we have owners A and B. After CRP is successful, the company will remain X Private Limited. It will be remaining in the register of members, but owners will be C and D, the new owners who have provided a resolution plan for this company. But if the company goes under liquidation, X Private Limited will be dissolved, struck off from the membership. Once all its assets are sold, realized, and the amount is distributed as per the IBC provision, the X Private Limited will be dissolved and it will be struck off from the register of companies, and there will be no owner here. So there are 2 processes, CRP and liquidation. CRP, the company continues. Liquidation, assets sold off, company is dissolved. So what we need to understand the flow of process. What is that flow of process? So there is a trigger point. when the company will be admitted, or what is that event which will allow me to initiate the proceedings of insolvency against that company. Me can be anyone. When I say me, it can be anyone. So the events which we need to understand. So once that event is triggered, let's say an event of default, that is one example. That is the only example, because insolvency will only start when there is more liabilities than asset. So that's an event of default. Then I'm eligible to initiate the proceedings against that particular company. I will be defined that who can initiate. So it will be defined. And then once this application is initiated and admitted, there are two words, initiation and admission. Initiation is I initiate the process, which means as a lender, let's say a bank, will initiate a process for insolvency against a particular company who is a borrower. How will I initiate? The whole initiation process is through the judiciary. That is NCLT. I cannot take any steps. I have to approach NCLT for initiation. And once the NCLT is convinced of the conditions of initiation of insolvency is justified, when all the conditions are met and justified, when I say justified, that means you have to justify at the court, that is NCLT, that yes, this company has actually made a default and therefore it should be admitted in insolvency. So when the finally court is convinced, and what does the court does? We all know that the court actually issues an order. So when the court issues an order, that means, yes, the company has made a default and it can be admitted towards insolvency. That means there should be admission. The court can reject it also, remember. The court can reject it also. The court can reject it also. Maybe the application is not correct, or there was no default, or the document submitted by the initiator or the lender is wrong. So the court may reject it also. So initiation, admission, and rejection. You have to initiate, it can be admitted, it can be rejected. By whom? Remember, court. So first, before initiation, there should be a trigger point. Then only I can initiate. Without any default, I will go to the court and admit that company and tell the court that please admit that company into NCLT and into insolvency. No, that's not acceptable. So there has to be an event. Once that company is admitted towards insolvency, then the process will start. The process starts with the declaration of moratorium, which is one of the prime reasons why companies are admitted toward insolvency, appointment of the RP and the process execution by the RP, constitution of the COC, Committee of Creditors, which will actually supervise the whole process, and then finally inviting for the submission of the plan for taking over the company as a going concern. This is the whole process. I hope it is clear. Any question? As per the flow of transaction. Yes, Sumit, we'll see to the conditions. We'll see to the conditions. right? So let us go ahead. Now, when I say the first process is the trigger, when it will be triggered, when it will be triggered. So when any corporate debtor, from MCQ point of view, it is important, corporate debtor. Now, corporate debtor in general context means company, LLP. That is regarded as a corporate debtor. But here in IBC, that company is regarded as the word corporate debtor. Debtor means because it has taken a loan. It is indebted to someone for loan or for supply of services or material. So when a corporate debtor, that is a company, has committed a default to whom? A financial creditor, operational creditor. Then, when the corporate debtor has committed default, then a financial creditor, of operational creditor, or the corporate debtor itself may initiate. That means another exam question. Who can initiate insolvency process with respect to a company or a corporate debtor? It can be a financial creditor, operational creditor, or corporate debtor. So whenever these words come in, financial creditors, obviously they are defined. Operational creditor is defined. Corporate debtor is defined. So let us understand certain definitions and why these definitions are important and the linkages between the different definitions. Definition first is of corporate debtor. Corporate debtor means a corporate person who owes a debt to any person. Means a debt to any person, right? So that is the definition of corporate debtor. Who owes a debt? And there is a default. So definition of default. When there is non-payment of debt. So again, two words, debt. A corporate debtor means a corporate person, that is a company, who owes a debt to any person. And there is a non-payment of debt because that corporate debtor has committed a default. Whole or any part or installment of that amount of debt. So that means if you have defaulted in payment of any installment, till now you were repaying the loan. Out of 50 lakh of loan, you have repaid 25 lakh, fine. But then in subsequent installment, you have not paid the debt. So it does not mean that you cannot argue that I have paid 25 lakhs, there is no such default. No. Even if you have paid any part, but then you have not paid the subsequent installment, there is a default. And the default will be there because when there is a due and becomes payable. Until it does not become due or payable, you cannot say it is a default. And you have not paid that money, then it is a default. So default should be of debt, non-payment of debt. Amount of default was 1 lakh, but after 24th March 2020, just one day before the lockdown was announced, this was a notification which came into existence. Amendment in the law in section 4, which has increased the amount from 1 lakh to 1 crore. So if the default is prior to 24th March and you have already filed a case at court, with all the conditions being fulfilled, then the amount would be 1 lakh. But if the case has been filed with all the documents after 24th March, remember, so if a case has been filed after 24th March of an amount of 1 lakh, but that the 1 lakh default was prior to 24th March, then the case is still acceptable, provided you fulfill all the conditions of the law. But if the default is after 24th March, then the default amount has to be 1 crore. I hope it is clear. Default prior to 24th March is 1 lakh. The case is filed after 24th March. It can be accepted subject to fulfillment of all other conditions. But if a default is after 24th March, then the default has to be of 1 crore. So you can initiate the proceedings of any amount of default prior to 24th March if the amount is 1 lakh. You can initiate, provided you fulfill all the conditions. But if the default is after 24th March, you can initiate, but the amount should be, default is that non-payment of debt. Non-payment of debt. Then there's a default. I hope it is clear. Then debt. So default of debt, remember, default of debt amount should be more than 1 crore. Now, what kind of debt? So debt is defined as a liability or obligation in respect of a claim which is due from any person. So liability or obligation in respect of a claim which is due from any person. So it's a liability or an obligation with respect to a claim. So you have a right, you have a claim, you have a right. You can go and claim that amount against which there is a liability. And that liability or obligation is with respect to 2 kinds of debt, that is financial and operational debt. 2020, Mr. Bhaumik, 2020. As I said, just 1 day before the lockdown was announced. 25th March was the date of announcement of lockdown. So just 1 day prior to that. So that means you will never forget that. So debt is any liability with respect to any claim. So you put forward a particular claim where you show that that corporate debtor is liable to pay that amount, and that liability will be respect to both kind of debt, financial and operational. So what is a claim? Claims is a right to payment or right to remedy for breach of contract. If such breach gives rise to a right to payment, whether or not such right is reduced to judgment, fixed, matured, unmatured, disputed, undisputed, legal, equitable, secured, or unsecured. So a simple means, a claims means we have a right to payment. Or if there's a breach of contract, then that breach of contract gives rise to right to payment. Let's say there's a contract against which a guarantee has been given. So guarantee is a contract. So a loan has been given. So against a loan, a guarantee is given. So loan is a contract covered under Contract Act. Now, if there's a breach of that contract, that breach will give a right for you that you can claim that payment. So even that guarantee can be considered as a claim, because it's a contract where that contract gives you a right to receive a payment. Now, that is immaterial whether that right has been reduced to judgment. That means by virtue of any judgment, that right has been reduced, or that right has been fixed that you can claim only 1 crore. Whether the right has got matured or unmatured, but at least you have got that right. Whether that right has got is disputed or undisputed, that is immaterial. You have that claim. Even if it is disputed, it can be challenged, but at least there is a claim. Then you prove that it is not disputed, there is not liable to that amount, that is immaterial. So that claim is legal, equitable or not, that claim is secured or unsecured or not, it is immaterial. The question here is that you have that claim, and therefore if you have a claim, there is a liability, and that claim could be of financial and operational. Now, when the two words comes in as financial and operational, remember, under the Companies Act and Disclosure of Accounts also, there is secured loan, there is unsecured loan, then there are trade payables, though they have not been defined here in IBC Act, but we can generally interpret by the definition of financial creditor and operational creditor. And within that financial and operational creditor, there are other creditors like secured creditor, unsecured creditor, or degree holder. Secured creditor, unsecured creditor, or degree holder. Now, who are financial creditor, who are operational creditor, who are secured, who are unsecured, who are degree holder? So financial creditor means any person to whom a financial debt is owed. That means now we need to understand a financial debt, the definition of financial debt. And it includes any person, a person to whom such debt has been legally assigned or transferred. For example, a bank has given a loan. Obviously, that is a financial debt, which we all know. Though we'll understand what is a financial debt. So financial debt means a debt along with interest, if any, which is disbursed against the consideration for the time value of money. Very important. Please note down the definition. Any amount which has been disbursed against the consideration for time value of money. So I have given a disbursed you an amount, and I will charge an interest, time value of money. That is known as a financial debt. It is the prime definition, and it includes also. So a bank has given a loan, and over a period of time, the bank transfers that loan to some other bank or to ARC, Asset Reconstruction Company. Now you would question, sir, is it possible to transfer a loan? The answer is yes. It is possible to transfer that loan under SARFAESI Act. So I will assign my loan to some other bank or to some other ARC, Asset Reconstruction Company, and say that going forward, you, that is the borrower, please pay that amount to that particular company. I have transferred your loan to that company. I have received certain amount against that loan transfer. I am happy. Now I don't need any interaction with you. Please pay that amount to that particular company. This is known as assignment. So even if that assignment is done, that person to whom the loan has been assigned, that will be regarded as a financial creditor. I hope it is clear. Exam question, assignment of loan, whether that is included in financial debt or financial creditor or not. So I hope it is clear to everyone. Can you everybody give a yes tick, or if any question, doubt is there, please ask. Financial debt means a debt where we have a time value of money and includes. So now we have other parts which are included in this financial debt. See, Mr. Bhomik, if you have read Surfasi or you have understood the concept of securitization. So normally when I feel that I need money, the bank has given a loan, but let's say you are not paying that amount. So that means my liquidity is getting squeezed, because normally what I believe that you are going to repay that loan, and from that amount as a bank, which I'm going to receive from you as a borrower, I will again finance to some other borrowers and my business will continue. Now, because you have not repaid the loan, I'm not able to finance to some other borrowers who are good enough and who are willing to take loan and are willing to repay. So what I do, I will transfer your loan to some other ARC and raise money against that loan and then give loan to some other new borrower. Maybe I will transfer that loan at a discount. So 100 rupee loan is sold to some other party at 80 rupees. Sold to some other parties at 80 rupees. So that particular process is known as assignment. I hope it is clear, Mr. Bhomik. So financial debt includes money borrowed against payment of interest, amount raised. I'm raising an amount by acceptance under any acceptance credit facility. That means, let's say CC. Pursuant to any note purchase facility, that means I've discounted, or the issue of bonds, debentures, loan stock, or any other similar instrument. So I have raised an amount. Raise means when you have raised, let's say you raise money through equity. So you have raised your amount through CC facility. So when you have borrowed against the payment of interest, normally term loan, or where you have raised any amount by entering into a transaction of forward sale or purchase agreement having the commercial effect of a borrowing. So you have entered into a transaction where you have entered into a forward transaction or forward purchase transaction. You have raised an amount today, which gives an effect of borrowing. So that is the second. Third, a liability in respect of any lease transaction or hire purchase contract. So when you have taken an asset under lease or hire purchase, that is also treated as a financial debt. Now, very important part here. Please note it down, exam related point. First, let me cover the fourth point. Any derivative contract or any factoring arrangement. We know that under factoring, the debtors are discounted. So I sell that debtors, and against that debtors, I receive the amount today. That means I am receiving the amount today in advance against all the future receivable. That means I have taken a loan against that debtors. That is again a financial debt. So any derivative transaction which has been entered for protection against or benefit from fluctuation of any rate, then that derivative transaction will be also regarded as a financial debt. So if there's any liability with respect to any derivative contract, then it is a financial debt. But this point is very important. Under money borrowed, it says that any amount raised from an allottee under a real estate project shall be doomed to be an amount having the commercial effect of the borrowing. Very important, friends. So let's say a builder has come out with a project and he says that I will be building 100 flats on this particular site. If you want to purchase a flat, please give me an advance amount and I'll execute a contract that is in 3 years time, I will build this flat building for you and hand over the possession of that building after 3 years. So maybe in the today you have to give 25%, first year 25%, after second year more 25%, at the last on the registry date, you have to give further additional 25%. So that means as a builder, you are raising an amount today. You are taking an amount from an individual person against whom you have guaranteed or committed a flat, not guaranteed, but committed a flat or a plot, let's say a plot also. So amount raised from any allottee, you are raising an amount under a real estate project. So you have executed a project which is registered under RERA. So allottee means shall have the same meaning assigned to them in clauses under RERA, Real Estate Regulation Act. So today that amount raised by that builder is also termed as a financial debt. Very important. So that means as a buyer of that property, normally termed as home buyers. Under IBC, they are termed as home buyers. Because you are an allottee under that real estate project, the amount which you have given to that particular builder against that purchase of that particular property will be treated as a financial debt. Further, financial debt will also include any counter indemnity obligation in respect of a guarantee, indemnity bond, documentary letter of credit, or any other instrument issued by a bank or a financial institution. So if you give in a counter guarantee with respect to a guarantee or bond or letter of credit, that will be also treated as a financial debt. And the amount of any liability in respect of any of the guarantee or indemnity of any of the items referred to in clause A to H. So let's say if you have taken any loan and for that loan you have given any guarantee, so that will be also treated as a financial debt. So guarantee, counter guarantee, factoring, derivative contract, hire purchase, lease, CC loan, bonds, debentures, normal term loan for payment of interest, and amount raised through home buyers. They are all treated as financial debt. Then we come to the definition of operational creditor. A person to whom an operational debt is owed and includes any person to whom such debt has been legally assigned or transferred. That will always be there. Even in financial creditor, we have seen if any assignment is done, that is the person to whom the assignment has been done, that will be treated as a financial creditor, same as here also as operational creditor. But what is operational debt? Means a claim in respect of the provisions of goods or services, including employment, or a debt in respect of payment of dues arising under any law for the timing in force and payable to central government, state government, or local authority. What does this mean? You have supplied certain material, you have provided consultancy services, audit services to a company, and the total amount due is more than 1 crore. Surprising, very rare instances where you get a fees of more than 1 crore, except for big companies, listed companies. Anyway, so you have provided services for which an amount is due of more than 1 crore, but the company is not paying you that 1 crore fees, then you are treated as an operational creditor because you have provided services against which you can have a claim for payment. Or if you are supplying certain goods, then you are treated, your amount which is due is regarded as operational debt and you are treated as operational creditor. Or if any amount is due under any of the law, let's say GST or income tax, or let's say property tax, land tax, So if any taxes are due by virtue of any law, that tax will also be classified as operational debt. Very important. Or payment with respect to any employment. So if your salary amount is due, you are not receiving the salary, then that will be regarded as operational debt. I hope this is clear, friends. Any question, please ask. So there are two types of debt, financial creditor and operational creditor. Yes, Mr. Boni, you are correct that small creditors of about 80 lakhs you cannot apply at all. Cannot apply at all individually. In groups, so that's an exam related query. So let's say, though it will be covered in due course of time, but because you have raised your point out here, I will explain. If there are two operational creditors, individual amount is 80 lakhs and 80 lakhs due. So individually, I cannot file a case against that company because the amount is less than 1 crore. So can I join hands and say, hum saath hai, bhai bhai, and let's come together and file a case against that particular company because clubbed together, the amount is more than 1 crore. Can I do that? The answer is no. So individually or in group, you cannot go and apply being an operational creditor because your amount is less than 1 crore. But if you have given a loan and the loan amount is 80 lakh and somebody else has given a loan and that amount is 80 lakhs, then both the loan providers can come together and file an application. That means under the scenario of financial debt, your amount can be clubbed. Jointly, you can file an application. But with respect to operational credit debt, you cannot join hands. No, Mr. Aniket, operational creditor does not mean internal people of the company. Internal people, what I understand from your word, it is employee. And if you think that the supplier of the raw material, goods, and services are also internal, then you are correct. But from my understanding, all the suppliers, service provider, they are also external. They cannot be treated as internal. Though employee can be treated as internal. I hope it is clear, Aniket. Any questions? Yes, employee is internal, but supplier of goods and raw material, they are also external, but they can file an application. Now, within financial creditor, there are secured creditor and unsecured creditor. You must have seen when you are drawing the balance sheet of a company, there are people who have given loan to that company. Let's say directors have given loan, or relatives of the director have given loan, or you have raised loan from your friends, but you have not provided any security. But that is a loan. So that is regarded as unsecured creditor. Now, what is unsecured creditor? A creditor in favor of whom a security interest is created. That means you have taken a loan against which you have provided a certain kind of security in the form of, let's say, a property which secures payment or performance of an obligation because you have provided security which will ensure that you will perform all your obligation, includes mortgage, charge, hypothecation, assignment, and encumbrance, or any other agreement or arrangement securing payment or performance of any application of any person, provided that security interest shall not include a performance guarantee. That means it is specifically excluded. A performance guarantee is a type of guarantee where you execute that this guarantee is being executed based on certain performance. Like, for example, in GST or in certain kind of government schemes which promote export and which allows you to import certain items without payment of duty under Customs Act. That means you have to export certain items. So when, let's say, you are importing certain goods and you say that to the government that because I will be exporting those goods, please don't make me pay, make me pay the import duty. For that, I am executing a performance guarantee that I will perform the functions of export. So therefore, I'm not paying import duty as of today. So if that performance guarantee has been executed, then that is not treated as security interest. So anything which is given as a security to the lender in the form of mortgage, charge, hypothecation, assignment, or encumbrance, or any other agreement or arrangement securing payment. So anything which secures my payment of loan, any arrangement which secures my payment of loan, that particular arrangement is known as security interest. So once you have created that security interest, then that loan becomes a secured loan. Okay, Bhumik, your question is, if there is more than 1 crore due in GST, then GST authorities can apply as operation creditor? The answer is yes, Bhumik. They can apply. Is it clear? Okay. So we have covered the basic definition, friends. Debt, what is debt? What is financial debt? What is operational debt? What is default? Who is a corporate debtor? And the amount. These are the basic definitions, though there are more definitions of relative, related person, and basic definition, which I'm not going because they may not be relevant for exam part. So let me just first complete the definition and then move on to the specific section. So liquidation commencement date, the date on which the proceedings for commencement of liquidation starts under section 33 or 59. There are two types of liquidation, normal and voluntary. We'll study later on. That date is known as liquidation commencement date. The period through which this whole process of CIRP, remember, two process, CIRP and liquidation, I'm talking about CIRP. The CRP should get completed in 180 days. That is the normal timeline which has been given. There's a model timeline, 180 days, section 514. But section 12 talks about that, yes, if things are not, working in 180 days, it may be extended by 90 days. But a provision to section 12 talks about that though it may be extended by 90 days, but then the overall time limit has been given at 330 days, including any time taken for legal proceedings in relation to such process. So let's say there's a case pending in the court and the court is taking time to decide on that particular matter. So overall, taking all those time delays, the overall time period is 330. So prima facie one time, 180, that's the main time. But it may be extended by 90 days, but extension shall be granted only once. Very important, extension shall be granted only once. So at once you want to take an extension, that please allow me 90 days because there are still certain buyers who are interested, but they are taking time to give that plan. So give an extension. So if you apply for 30 days, they will give you extension for 30 days. But thereafter you again go for extension, the court will say, no, I'm not going to give you further extension because your extension can be applied only once. So at one go, you apply for 90 days. So that is the maximum time period which is allowed for extensions, 180 plus 90, 270, plus 60 days as a margin, provided if there are any pending cases at NCLT, somebody has filed an application, somebody has raised an objection. It may happen because there's a process where there is judiciary involved. So there are a lot of complications. So in deciding those cases, if the court is taking time, but the overall time period would be 330 days. Is that clear, friends? Any questions on this time period? I hope till now the process is simplified and conceptually clear. We'll take a short break and then we'll start with the few MCQs and the initiation of the process. So short break and see you soon. Okay, friends. Yes, Ms. Bonnie, I will do that. And yes, Bonnie, it is the time obligation of the NCLT, right? Sorry. One second, sir. Just a little. Okay, sorry, friends. Certain technical issues. Okay, so I was talking about 330 days, and that is the closing date for which we need to take care. So MCQ questions. I hope this is the easy questions for all of you. Can you answer it? I need the answers. Yes, please. I think this is an easy one. So here, though we have not discussed it, but then the correct answer is A. A is the correct answer. Which of the following enactment has not been amended as a part of the Insolvency Bankruptcy Code? Again, very important. Please note that the Limitation Act is not part of this particular change. Limitation Act has not been touched upon. Who is the corporate debtor as per the code? So corporate debtor, a company which always owes debt to any person. A corporate person who owes a debt to any person. So corporate person to any person, not necessarily to any company. So B is the correct answer. Then next part, according to the code, which of the following is not a financial services? Not a financial services. It is payment of wages to employees. Otherwise, everything is under financial services. Under financial services. What is the meaning of debt under the code? Debt means a liability or obligation in respect of a claim which is due from any person. It includes a financial debt and operational debt. See both A and B. Let's put the application. This is important. From here, we move on now to the initiating the process. Initiating the process of insolvency. So, application by financial creditor. Now remember, for initiating the process, there are three sections: 7, 9, 10. Very important. 7, 9, 10. 7, 9, 10. 7, 9, 10. 7, 9, 10. Remember these three sections: 7, 9, 10. 7, 9, 10. 7, 9, 10. 7 is by financial creditor, 9 by operational creditor. 7 by financial creditor, 9 by operational creditor. So when an application is filed by financial creditor, now where, remember, the application will file to NCLT. Application will file to NCLT. Application will file to NCLT. Now, who will file? Financial creditor, either by itself or jointly with other financial creditors. Or jointly with other financial creditors. Jointly with other financial creditors. Remember, as I discussed, financial creditor 1 can club together jointly with other financial creditors. Or any other person on behalf of the financial creditor. So any other person on behalf of financial creditor can apply to NCLT when a default occurs. When a default occurs. When a default occurs. It is provided that in case of financial creditors who are allottees under a project, remember the word allottees? An application for initiating a CRP against corporate debtor shall be filed jointly by one not less than 100 of such allottees. Very important. Exam related point. So if the home buyers have to come together, minimum 100 people should come together in the same real estate project. Or not less than 10% of the number of such allottees under the same real estate project. Not less than 10% of number of such allottees under the same real estate project. Whichever is less. Whichever is less. So there has to be minimum 100 people coming under the same real estate project, or 10% of the allottees, whichever it is. For example, if there are not 100 allottees, 100 home buyers, there are 80 home buyers. So 10% means 8. So in that case, even 8 are sufficient enough to submit an application. 8 are sufficient enough to submit an application. So when the number is less than 100, or if the 10% is less than 100, then the less number would also be allowed to file an application in NCLT. I hope it is clear, this calculation. No, they cannot singly apply. So Bonnie, they have to come together at least 100 or not less than 10% of such allottees. Now remember, if the company has floated many real estate projects, the allottees of different projects cannot join together to initiate CRP against the company. So they should belong to the same real estate project and fulfill the condition of minimum number of allottees. So applicant on behalf of applicant, a guardian, an executor, a trustee, a person duly authorized by the board of directors. Why would a trustee be needed? Especially in case of debentures. So in case of debentures, a trustee is appointed who will further take care of the same. Supporting documents with the application. So when you're filing an application, though may not be relevant from exam perspective. So one thing which is important, obviously you need to prove the default. So as I said, if you provide the document of information utility, then the purpose of the sufficient evidence is there. Second important thing, when you file an application, remember, you have to propose the name of the IRP. You have to propose the name of the IRP whom you are appointing as an insolvency resolution professional. The NCLT will scrutinize all the documents, the scrutiny of the desk, and ascertain the existing of default within 14 days of the filing of application. So they will ascertain the existence of default, and thereafter, based on the existence of default, they will decide on the case. Normally, practically, it does not happen. It does not happen, but yes, the law says 14 days is the ideal time. So once the NCLT reviews those documents, it will give two orders: order admitting application or order rejecting application. Order admitting application where default has occurred and application is completed in all respect and no disciplinary proceedings are pending against the proposed IRP. Or where the NCLT is satisfied that no default has occurred and application is incomplete and certain disciplinary proceedings are pending against the RP, then NCLT will reject the application. NCLT will reject the application. So that is section 7, very simple. Remember, first thing, proof, name of IRP, NCLT will decide either admit or reject. Section 7 application. Section 9 is something typical. Section 9 is something typical. Section 9 is something typical. Now, Section 9 talks about application by operational creditor. Application by operational creditor. But before that operational creditor makes an application at NCLT, the operational creditor has to send and demand notice. The operational creditor has to send a demand notice. Demand notice. Demanding payment by the corporate debtor that these are the outstanding amount, these are my outstanding bills, please pay the amount. A demand notice has to be sent in Form 3. That has been given in the annexure, Form 3. And Once the Form 3 is sent to the corporate debtor, and the corporate debtor, after expiry of 10 days from delivery of that demand notice or invoice, does not receive the payment or does not receive any notice of dispute. Very important. A very technical matter in the eyes of law, that first you have to send a demand notice. First you have to send money. It will not matter whether it's above 1 crore or not. The law clearly says 100 or 10% of the outstanding. So if it does not receive payment or does not receive notice of dispute, he will file an application. He will file an application. Now, dispute is regarding what? Dispute regarding, let's say, supply of materials, supply of services, that they are not up to the mark, there's a quality problem, there was a rate difference, therefore the payment has not been made. So dispute will include, very important, this is an exam related point, case study, dispute will include a suit or arbitration proceedings related to. It will include, remember. So this is will inclusive definition. So other than that, other than what is a normal dispute, it will include any suit or arbitration proceedings related to existence of amount of debt, quality of goods and services, the breach of representation or warranty. So remember, an operational creditor, first step, send a demand notice. Second step, wait for 10 days. Then after 10 days, two conditions: does not receive notice or does not receive notice of dispute. What is dispute? Dispute is inclusive definition, normal dispute, but includes any suit, arbitration proceeding related to any this thing. Thereafter, he may file an application. Thereafter, he may file an application. And then along with the application, he will attach demand notice. Affidavit, which is again very important, and no notice given by the corporate debtor relating to dispute of the unpaid operational debt, and a copy of the certificate from financial institution that no amount has been received by the corporate debtor and no amount has been paid by the corporate debtor in respect to that operational debt. That means attaching a bank statement that no amount has been received from the corporate debtor. Along with that, we will proof of that there is no dispute and record of information utility, if any. Then the NCLT will review their application, again ensure that the debt is due, the demand notice is there, and no notice of dispute has been received by the operational creditor. So if everything is complete, it will be admitted. If something is missing, it will be rejected. So the NCLT will reject the application if the application is incomplete. There has been a payment of the amount, creditor has not delivered the invoice or demand notice, some disciplinary proceedings is pending against proposed RP, or notice of dispute has been received by the operational creditor, or there is a record of dispute in the information utility. And everything just the opposite, it will admit the application. So there have been a lot of cases at NCLT, because normally when the case has been filed against the corporate debtor, they have to come and prove that there was a dispute. So there have been a lot of cases in proving that dispute. A lot of cases in proving that dispute. And dispute, first condition, remember, please note it down. Dispute should be pre-existent. Now, pre-existent means what? It means that it should be there prior to raising of demand notice. Prior to raising of demand notice. Prior to raising of demand notice. So the day I send a demand notice, the dispute should have been in existence. After receiving a demand notice, thereafter I raise a dispute. No, you had a problem with the quality of goods. Therefore, I'm not making you the payment. It is not allowed. So very important, friends. So a lot of cases have been decided till the NCLAT level regarding the matter of dispute. And it has been decided in Mobilex Innovation, a very important case law, that the existence of dispute should be there before the receipt of such notice. The third scenario. Application by the corporate debtor. Very important. So we have seen two. 7.9. Bhaumik, see, when you submit an application, the RP is appointed. Proposed in the application. When the NCLT admits, it will appoint that RP, which has been proposed by the operational creditor. I hope it is clear. Application by corporate debtor. So where the corporate debtor has committed default, so company is under default, that is by default, that is a precondition. A corporate applicant. Now, corporate applicant means what? Corporate applicant means the corporate debtor itself. A member, a partner of the CD is authorized to make an application for the CRP under the constitutional document of the corporate debtor. An individual who is charged of the managing the operations and resources of the corporate debtor, CEO. A person who has the control and supervision of the financial affairs of the corporate debtor, that is, let's say, CFO. So corporate applicant means four type of people. So the company itself can go towards insolvency and declare that I am insolvent. So supporting documents which you have to attach with the application, information relating to books of accounts and other document, the name of the RP, again you have to propose the name of the RP, and special resolution passed by at least 3/4 of the total number of partners of the CD, as the case may be, approving filing of application. Is this clear? Any questions on this? So 3 applications can be made. One by the financial creditor, second by the operational creditor, and third by the CD itself. CD itself. So obviously NCLT will review it within the applicable time limit. Application is complete, name has been proposed, then it will admit. But if the application is incomplete and the name has not been proposed of the RP, then the NCLT may reject the application. Persons who are not entitled to initiate insolvency resolution process. A corporate debtor who is already undergoing an insolvency resolution process. That means companies which is already under CRP, they obviously cannot apply under this section 10. Very natural. Or a company which has completed CRP 12 months preceding the date of application. So 12 months prior to this, they have already completed the CRP process. So once you have already completed CRP, again you want to go to insolvency, not allowed. Or a company which has violated the terms of resolution plan which was approved 12 months before the making of an application. Suppose a plan has been submitted of resolution and there is a violation of that plan by the corporate debtor, then it cannot make any application. And if a liquidation has already been ordered, then obviously I cannot further again go for CRP process. A financial creditor who has violated any of the terms of the resolution plan which was approved 12 months before the date of making an application. So a FC under section 7 cannot make an application. If, let's say, an FC has submitted a plan for some other company and it has violated that terms and condition of the plan, then it cannot make an application for insolvency against any other company. So section 11 is very important from exam point of view. Person who are not entitled to this process, CD and FC, two situation, CD and FC. Any questions on this? So remember, now a scenario. These are certain sections which actually relate to further the next level of process. But again, because here it is given under 11, a company is already under CR. And the company which is under CRP, it is an operational creditor. It is an operational creditor for some other company. So can this company file a case against some other company? That means I am under CRP. Can I file Section 7(9) application against other company? Or if I've given a loan to other company, can I file a Section 7 application against other company? So the answer is yes. So this is an exception to Section 11 that if I am under CIRP, I can file case against any other corporate debtor. So Section 11, those who are not entitled, with an exception that a company which is under CRP, they can file case against other corporate debtor. Now, very important. The adjudicating authority may allow withdrawal of application under 7(9) or 10 if 90% of the COC approve the withdrawal application. Approve the withdrawal application. That means any application which has been admitted by NCLT, that can be again withdrawn. That means NCLT will give a withdrawal order of that particular original order, provided you make an application to the NCLT. Application will be made by the applicant himself who has initially applied, with the approval of 90% voting share of the COC. That means we need to understand COC, the voting share, that will come in subsequent section. We'll come back to this section later on, that when the withdrawal of the application is allowed. 12A, which was introduced later on, it was not part of the initial law, but it was introduced later on. Let's have some questions for all of you. Who can initiate CRP process? Who can initiate CRP process? Yes, very good. Who among the following is not entitled to initiate CRP? Very good. A is the correct answer. What is the time limit for completion of IRP process? One 80 days, we all know, but then from which date? 180 days from which date? From the appointment of the RP. From the appointment of the RP. How much extension can be granted for IRP process? $90 days. Where a CD has been committed to default, a corporate application may file an application for insuring CRP with the AHL within a period of dash number of days of the receipt of application. $14 days, we all know. The adjudicating authority shall communicate the order of admission of application to. Now, this is a tricky one, though it has not been given in the Act, but then it will be informed to the IRP. It will be informed to the IRP. Students, you can start raising your questions before we end today's class. Can you give which one is correct? A or B, 1 or 2, which one is correct? So, which one is correct? Second is correct. So friends, till now what we have discussed, 7, 9 and 10, an application made for insolvency proceedings by financial creditor, operational creditor and the corporate debtor. And corporate debtor. Now, what will happen after that? What is going to happen after that process? The CRP will start. The CRP will start. So when I say the CRP will start, that means what is going to happen practically? The insolvency resolution professional is going to take over the charge, and the old management will lose their powers. So the concept of CRP or resolution is Insolvency Bankruptcy Code is, instead of debtor in control, it is now creditor in control. Instead of debtor in control, it is now creditor in control. Instead of debtor in control, it is now creditor in control. So the old management will lose their powers. Old management will lose their powers. And the process of company being taken over by the IRP will start, and then the IRP will conduct the process as per the law. So the first step which is there is, first thing which is going to happen is section 14, a moratorium. A public announcement will be done in newspaper that the company is admitted in insolvency. So claim, whoever wants to file a claim, they can submit their claim. And the IRP is appointed who is going to take over the process. Yes, Mr. Baumik, even when the corporate debtor itself files, once the company is admitted under insolvency, be it under section 7, 9 or 10, it will be creditor in control. It will be creditor in control. There is no question of corporate debtor in control. So the exam question, what is the impact of the NCLT order? See, when I think CRP admits means NCLT will give an order. NCLT will give an order. And the NCLT, when it gives an order, that means order signed by the judges. From that date, the date the order is signed, from that date, the CRP commences, and 180 days will start from that day. 180 days will start from that day. I hope it is clear. 180 days will start from that day. And from that day, moratorium applies. From that day, IRP will take control, and the public announcement will be done within 3 days. I'll just go through the sections of public announcement because it's a short thing. So public announcement is done in a particular form, not later than 3 days from the date of appointment of the IRP. So IRP is going to appoint. Remember, the word IRP means interim. So that means he is there for some time period, temporary. Interim means temporary. So he's there for some basically time period. We'll discuss that. So this purpose of public announcement is to make the announcement in newspaper where the registered office of the company is situated, and inviting claims from all the creditors of the company, and giving a time limit that you have to submit the claim within this particular time limit. So please submit your claim within this particular time limit. So the public announcement is available on ibbi.gov.in. That's a website where all the public announcement is done. And you can find all the public announcement on those websites. of each company which has gone under insolvency. So that is first part, which is done within 3 days. And thereafter, the RP will obviously take the proceedings and a moratorium is applied. So any further questions for today's session, friends? So we have covered the basic till section, and we'll cover certain case-based scenario on the 3rd day. So any questions on these topics, or otherwise? Yes, within 3 days of the order passed. So thank you for today's session. Hoping it is useful for all of you, and I'll upload the material tomorrow morning so that you can review it and study it, and then we can come back again day after tomorrow for further discussion. Thank you.